welcome back to Global Value. In today's video, we will be taking a look at Starbucks and we will be performing a fundamental stock analysis of Starbucks. Starbucks trades on the New York Stock Exchange under ticker symbol SBUX. But before we get into the company, let's remind ourselves of the 4 principles of value investing. Principle number 1, when you purchase a share of stock, what you're really buying is an ownership percentage in the underlying business, and over long periods of time, a stock is going to return what its underlying business returns. Principle number 2, Mr. Market is there to serve you, not to educate you, and this means that price does not always equal value. Principle number 3, in order to mitigate risk, investments require a sufficient margin of safety. This helps to achieve superior risk-adjusted returns over the long run. And finally, principle number 4, for any investment, you need to stay within your circle of competence. Maintain intellectual humility. Don't invest in a business unless you truly know it inside and out, just like an owner would. Now looking at Starbucks, currently Starbucks is trading at just over $80 a share. Over the past year, Starbucks has taken a pretty significant fall, dropping 31%. Starbucks is still up almost 11% compounded annually per year, going all the way back to 2005, even incorporating the Great Recession. Starbucks has maintained that pretty steady 11% compounded annual growth rate. Starbucks is currently just $1 over its 52-week low, so Starbucks is trading really close to its 52-week low, and they are $40 off of their 52-week high. Starbucks is the world's second largest restaurant chain behind McDonald's. Their market cap is $91.5 billion. For some more background about Starbucks, Starbucks is one of the most widely recognized restaurant brands in the world, operating more than 34,000 stores across more than 80 countries as of the end of the first quarter of fiscal 2022. Its stores offer coffee and tea beverages, roasted whole beans and ground coffees, single-serve products, ready-to-drink beverages, and various food products such as pastries, breakfast sandwiches, and lunch items. The firm operates in 3 segments: North America, international markets, and channel development, which consists of grocery and ready-to-drink beverages. The coffee chain generates revenue from company-operated stores, royalties, sales of equipment and products to licensed partners, ready-to-drink beverages, packaged coffee sales, and single-serve products. The company was founded in 1971 and is based in Seattle, Washington. Recently, Starbucks has been in the news because their former CEO, Kevin Johnson, has announced that he is stepping down and retiring. In his absence, Howard Schultz is stepping back into the role as Starbucks CEO for the 3rd time now. As such, Howard Schultz is having to deal with a growing movement to unionize Starbucks stores, as well as an uncertain macroeconomic environment. Now that we've got some background on Starbucks, reminded ourselves of the 4 principles of value investing, and seen how Starbucks stock has done, let's get right into the fundamental analysis of Starbucks stock by looking at its financials. The first metric we're looking at, pillar number 1, is the 5-year average PE of Starbucks. So we're looking for Starbucks price to earnings over the past 5 years to be below 22.5. Starbucks has traded at an average PE of 48. However, currently it's down to 21.5. So despite the current low in PE, this is still going to be an X, as that 5-year average PE was 48. Next, we're looking at Starbucks return on capital. Over long periods of time, a stock is going to return what its underlying business returns, and returns on capital are going to be those returns. So Starbucks had pretty phenomenal returns on capital prior to the pandemic, although 2020 was a very rough year for them because of the pandemic, but it looks like they are bouncing back. So averaged out, Starbucks has returned 37.5% return on capital over the past 5 years. This is about 4 times that 9% that we were looking for. So this is going to be our first check. Pillar number 3, we're looking for 5-year revenue growth. So in 2017, Starbucks did $22.4 billion of revenue, and in 2021, they grew that to $29 billion of revenue. So that's another check. Pillar number 4, we're looking for 5-year net income growth. In 2017, Starbucks had $2.9 billion of net income, and in 2021, they had $4.2 billion of net income. So that's another check. 3 checks in a row. Next, for pillar number 5, we're looking at Starbucks share count. We don't want any business to be diluting existing shareholders. So Starbucks over the past 5 years has bought back shares. So in 2017, they had 1.4 billion shares outstanding, and in 2021, they had 1.2 billion shares outstanding. One thing to make note of is that this is not likely to continue, as one of Howard Schultz's first moves coming back was to cut this share buyback and to focus on reinvesting in store processes and staff. Even given that, it's probably unlikely that Starbucks is going to be issuing new shares, but that's something to watch for. However, this is another check on pillar number 5. So far, we have one X, but the last 4 pillars have been checks. Next, for pillar number 6, we're looking for 5-year free cash flow growth. Free cash flow is cash from operations minus capital expenditures. In 2017, Starbucks had $2.7 billion of free cash flow, and that grew in 2021. They had $4.5 billion of free cash flow. Filling in the other years, in 2018, they had $8.7 billion of free cash flow. In 2020, they had $3.2 billion, and that shrunk to just $100 million of free cash flow in 2020 during the pandemic. Averaged out, however, this comes out to an average 5-year free cash flow of $3.8 billion. So we're going to need that in pillars 7 and 8. As I said, Starbucks has had free cash flow growth, so this is another check on pillar number 6. So even though we started off with an X, we've got 5 checks in a row. Next, for pillar number 7, we're looking at how Starbucks utilizes leverage. So we're looking at net debt, which is debt minus cash equivalents, compared to that 5-year average free cash flow multiplied by 5. And taking a look at the chart, we can actually see that Starbucks utilized very little debt until recently. However, currently they have $17 billion of net debt. Multiplying their 5-year average free cash flow, which was $3.8 billion times 5, gives us $19 billion. So that is going to be another check there. If Starbucks had the same cash flow profile over the next 5 years as they did in the past, they would have $2 billion to spare after paying off all of their debts. And last but not least, pillar number 8, we're looking at Starbucks market cap compared to its average 5-year free cash flow multiplied by 20. This pillar is designed to give us a rough estimate of what would be a reasonable price to pay for the company based on an average free cash flow profile. Currently, Starbucks market cap is $91.4 billion. Multiplying their $3.8 billion of average free cash flow times 20 brings us to $76 billion. So that is going to be an X on pillar 8, off by about $15 billion or so. So in summary, Starbucks checks the box on 6 out of 8 pillars. It looks to be a great business that earns very high returns on capital. It's growing revenues, net income, and free cash flow, even despite some of the setbacks because of COVID. They've increased their amount of debt recently, although it's still manageable. And although they've bought back shares over the past 5 years, that's not likely to continue. Overall, I would say that Starbucks looks like it's a great business. However, the 2 pillars that were X's had to deal with its valuation. So based on those metrics, Starbucks could still be a little expensive. This is a business that me personally, I'm keeping on a pretty tight watch list. One thing to note about the business is that as it expands, for each new location that Starbucks opens, that store is able to produce profits that pay back that investment in about 2 years or so. So that is pretty incredible. And Starbucks is able to have a really high density of stores. Well, guys, that's it for today's stock analysis of Starbucks Corporation, ticker symbol SBUX. If you enjoyed the video, please be sure to like the video and subscribe to the channel for more stock analysis videos. And comment down below what business you want me to take a look at next. Thanks for watching to the end and have a great day.